Hello, folks. If you've just finished watching the How to Ride the Gold and Silver Bull webinar that we just recorded with Rick Rule, Chris Martenson, and Brian London, we're now joined here by the endorsed financial advisor by Peak Prosperity, New Harbor Financial. We're joined today by the lead partners there, Michael Preston and John Lodra. Hi, Mike and John. Thanks for joining us.
Hi, Adam. Thanks for having us on.
Good morning, Adam. Good morning, Chris.
Great. Well, the reason why Chris and I wanted to briefly meet with you guys after the webinar that we just recorded is, of course, precious metals are a very important part of everybody's portfolio. It's something that Chris and I have been shining a very bright light on for years at Peak Prosperity. And particularly at the beginning of this year, really beginning to beat the drum that it does seem that we're in a new bull market. I think Rick and Brian added a lot of gasoline to that fire in terms of the positive outlook for where the precious metals are headed over the next couple of years for some concerning reasons, negative interest rates and all the like. But precious metals are just a part of people's overall portfolios. And while there's some very exciting things that we just learned that we can do with precious metals, particularly mining companies, in one's portfolio, there's all the rest of one's portfolio. And what do you do with that if you're concerned about where things are headed in today's markets? And that's why we wanted to bring you guys into the picture to help talk about that. So I know you can help people put those precious metal mining stock plans that Rick and Brian talked about into action. And I'm sure there's a lot of people looking for help with that. But we want to actually help also people figure out what to do with the remainder of their portfolio. So with that, Chris, why don't you give us just a little bit of background as to why Peak Prosperity selected New Harbor and what folks can hope to get from working with them today.
Well, absolutely. I'd be glad to. And this is a recommendation I can very heartily endorse. Adam and I have spent a lot of time reviewing financial advisors, and we have a point of view around this. We think that the next 20 years are going to be completely unlike the last 20 years. It's going to be very turbulent, and you need to have financial advisors who can speak the language that matters to you. So,
and for somebody who's coming in who's just watched the video and is excited to maybe invest for the first time in precious metals miners, or maybe they've got a foothold in that space, but they want to expand what they have. Just talk a little bit about your guys' existing experience with investing in precious metal miners. They're very volatile. I know you guys use some hedging techniques to try to take some of the downside risk out of the picture. But how would you help that person kind of onboard into this sector?
Well, we've had a position in precious metals in our flagship portfolio and in our core portfolio for many years. Historically, miners are very undervalued relative to the metal. That's been the case for at least 5 years. And the metal itself, we're very bullish on for a lot of different reasons. A lot of those reasons were talked about by the guests on the webinar recently. The $17 trillion in debt, and it's growing very quickly. There's really no way out of this problem. There's no way to raise interest rates. Interest rates have got to stay the same or go down, as one of the guests was talking about as well. And this is all bullish for gold, which of course should have a multiplicative effect on the miners. We think that Rick was absolutely right when he talked about trying to capture beta. Maybe not all of the viewers understood completely what beta and alpha was, but what Rick was saying was essentially make sure that you're exposed to the sector. Don't miss the move that the sector is going to have. The sector has moved quite a bit year to date. We believe it's going to move quite a bit more over time. It may take some time. There may be some backing and filling. It definitely will take some time. But overall, our belief is the trend has turned into a bullish trend. So you want to make sure that you're in the entire sector. So worry less about picking individual stocks, worry more about being in the sector. So we are in one or sometimes two or three of the largest exchange traded funds that track the entire sector. That is our core position. Sometimes, and particularly if a client wants it, we will accommodate individual miners around the periphery, but the bulk of our position is in the sector itself. It's just not worth it, in our view, to try to pick individual miners, particularly for the bulk of your holdings. So we have that exposure. It's presently in our portfolio, it's around a 10 to 12% position. We don't believe in having a very large over-concentrated position because we want to be able to ride out this trend. The hardest thing to do after a bear market, when a bull market starts, is to not get shaken out. And that's what the title of this whole webinar is about, how not to screw it up, basically, right? And the bull market, if it's a real bull market, and we think it is, will do its best to shake you out on the way up. And the best way not to get shaken out is to have a position size you can live with. And we think being exposed to the overall sector, and at times we'll add some hedges in from time to time. We have some put options on our gold mining position. It's presently about 25% below the present price. So it's a very out of the money hedge at the moment because we don't want to pay a lot for the insurance at the moment. We will probably, because we're still very bullish on the sector and think the move has room to go, we'll probably adjust that though as the sector moves higher. We'll probably tighten up those hedges, and ultimately we'll probably trim the position as it grows. But we think it's very early for that, and we're trying to just sit on our hands and let it grow at present.
Great description, Mike. And just to help people who don't maybe fully understand what we mean when we talk about hedging, you use the word insurance. That's essentially what you're talking about there, right? Where when you take a position, especially if it starts appreciating, you buy some sort of protection as insurance, usually a put option, which is a price below its current trading price. And if the position you own begins to actually fall in value, there's some price below which your insurance begins to kick in and begins minimizing future losses. And I know certain cases there's a price below which you're kind of fully covered, right? So you're not protecting against zero losses, but you're protecting against, hey, if the position goes below a certain amount, let's say 20, 25%, I'm not going to lose much more than that because my insurance is beginning to gain value as we go lower. Is that a correct description?
Yeah, that's right, Adam. And the insurance analogy is really, really appropriate and something that most folks can relate to. When you look at, auto or health insurance, for example, you often, consider a trade-off between the size of deductible that you're willing to incur versus the premium you want to pay. The larger the deductible you're willing to bear, the lower the premium, and vice versa. That's in effect the dynamic that's at play with these hedging tools that we often will make use of. And at times, we'll be, making the judgment that it makes sense to, pay somewhat of a larger premium because we don't want to bear such a large deductible if the risks are that much greater. So we kind of dynamically, answer that question as market conditions change.
Great. And as Mike mentioned, you said you'd sort of move up the price of that level of insurance. And that's a great thing in a bull market, right? Which is as your core position keeps doing better and better, you can then begin to creep your insurance price up so that if indeed the market eventually tops out and begins to reverse, you can protect a lot of those gains that you've made along the way, correct?
That's true, Adam. And we always have to be careful about not overspending for insurance because there's a cost to all insurance. So
Yep.
we do our best to strike a balance so that it doesn't cost too much.
But just to summarize, for someone who just finished watching the previous webinar, if they're excited to get exposure to the beta of the overall sector, right? That's sort of the safe way to hopefully ride a pretty substantial appreciation wave here. But then maybe with a smaller part of their portfolio, they want to subscribe to one or several of the newsletters that were mentioned and put together a collection of precious mining stocks that they want to track and try to swing for some alpha. You guys can help them put that together too. You can then, as makes sense, not only deploy into those stocks for them, but also where it makes sense, maybe show them how to hedge some of that risk. Sounds like that's all completely doable from your guys' end. And then, of course, once they've done that, then you guys can unlock the discussion to, okay, separate from precious metals and natural resource related stocks, what do we want to do with the rest of your portfolio?
Yeah, that's absolutely right, Adam. And that's key. I mean, we always consider the precious metals and really any advice we give in the context of the totality of a client's picture. And many of the things we just talked about there in terms of hedging tools that we often will use with precious metal parts of the portfolio, we have these tools available for the balance of the portfolio as well. So, sometimes the cheapest form of insurance is just simply not to be involved in a particular asset class. So, for example, the broader stock market right now we think is incredibly overvalued, and we have very minimal, almost net neutral exposure to the stock market. So that's the cheapest form of insurance. But for areas where we do have exposure and we feel that risks are such that having some insurance protection makes sense, we'll use these similar types of tools on the balance of the portfolio. And that can oftentimes make sense. For example, if folks have legacy stock positions, perhaps that they've had for decades, that have very large capital gain taxes, that for very prudent reasons they want to manage the tax consequences of a full outright sale of the stock. We can bring hedging tools into the picture to protect the downside or the concerns they might have for those kind of traditional stocks, but yet manage the tax exposure over a period of time that makes sense for them.
All right. So great segue into probably the big question here, which is for somebody who's super excited to be listening to you guys and maybe for once actually hear from a financial advisor or a broker that actually thinks similarly today, because I know a lot of the topics that we talked about in the previous webinar and even in this short one, a lot of people bring to sort of their traditional financial advisor, and he or she sort of scoffs at the idea of owning any gold, says, look, just believe in the stock market. It's always driven value over the long run. Of course, Chris and I, for a whole bunch of reasons, don't feel that way. I know you guys don't feel that way. So it's hopefully refreshing for a lot of people to actually hear that there are guys out like you who exist. So if they're excited to talk to somebody like you and excited to put some of these precious metal strategies into play, what's the best way for somebody to follow up with you guys?
Well, we'd love to talk with them. I know that both Adam and Chris will most likely provide a link that they can click on and get connected with us. We'd be happy to talk to people, review their portfolios, send the list of their stocks, their bonds, their mutual funds. Just send a copy of their statement to us. We do this all the time. We'll just go through it. We'll talk with them. The first thing we're going to want to do is make sure they're not overly exposed to risk. So we're going to make recommendations if they are to reduce that risk. And we can dive into some of the individual securities as well. But we talk all the time with people, and there's no obligation to become a client of ours. We're happy to help in any way we can, to review things, to maybe help set people going in the right direction. So it's true that we talk to hundreds and hundreds of people, and it's very rare that we talk to anybody that has talked to their financial advisor and has heard anything other than, don't worry about it, it'll all be okay, just stay invested. That's pretty much the common theme out there. But we'd be happy to lend what we think is a non-traditional eye to things and give we'll do our best job at giving unbiased, objective advice, and there'll be no obligation.
I love is I've heard from people where they've said, hey, I'm thinking of investing in my homestead. I would like to put some solar panels up. And you guys said, yeah, that's a great idea. People say, hey, I think I should have some physical gold. And you're like, yes, everybody should. So what I like is it's people's lives are this very larger comprehensive thing. It's not they have finances and money and they have all this other stuff. You'll work with them to help bring these things together into one spot and help manage the risks. Because, as I pointed out in the webinar yesterday, this is the third everything bubble. This time it's a credit cycle bubble. And we've been through two of them before. And I think it's conceited to think this time is different. That they'll rescue it again. We know that the pressures and risks are building. And what I'm inspired to do in life, and that's why I think we shared a line with you guys, is, well, I want people to be safe and happy and healthy in all of this. I don't want anybody to get destroyed. And we knew people who got destroyed in 2008 and 9 because 50% drawdown is a really hard thing to recover from. So return of capital, just as important as return on capital. And that's really the environment we're in. And for people who that speaks to, hey, they're listening and they're probably nodding their heads right now going, yeah, that's me. And for other people, that's not a great fit. But this having at least the ability to give people an option to speak truthfully and openly about what's really going on and how to position themselves is really a breath of fresh air in this day and time. So that's at least in my view why we're aligned with you guys, because we all speak the same language, and it's a big complex world out there. We're all doing the best we can to make sense of it. So yeah.
Thanks, Chris. I mean, we talk to a lot of people, and most of the time we're talking to them about paying down debt, doing things like solar, other investments, tangible assets. And if there's anything left, which there often is, then we talk about other things. But we look at things holistically, the big picture. and it's not always about investing in the stock market.
Well, very well put, guys. So in wrapping things up here, Mike, to your earlier point, we will put an overlay here on this video with the URL that folks can go to, the Greylock Peak URL that folks can go to schedule that free consultation with you. And I appreciate the fact that you clarified for folks that it's totally free. There's definitely no strings attached. It's really just your guys' way to help people that are looking for guidance here right now. So with that, guys, thank you for your time. Thank you for all the work that you continue to do on a daily basis for Peak Prosperity's members that come over and talk to you guys, and for all the people that you've helped so far. It's very exciting to finally be talking to you guys at a period where the precious metals are actually moving in a positive and encouraging direction after so many years of them being range bound in kind of a morbid, depressed state. So there's lots of exciting activity going on here, and I think Rick, Chris, and Brian really gave us a lot of optimism in the previous webinar about where things could go from here, and we're excited and going on this future journey with you guys. So thanks so much, and I'm sure we'll be talking again soon at one of these webinars, because I think the markets are going to give us a lot more to talk about.
Thanks, Adam. Thanks, Chris, and thanks, folks, for viewing today.
All right, and thanks, and goodbye, everyone.
Thank you.
And, we'll see you next time.
Next time. Thank you.